so I can see everybody. Hey guys, thanks for coming in. Thanks, Lee, for putting this together. I've been I haven't been very good about doing many webinars. I'm really I'm kind of the same school of thought as Lee. I really try to empower people, and so I don't push sales, and I haven't been doing, last year I think maybe I did a couple webinars, but I usually do them when people ask me, and I should really do more because we have a lot to share, as I think you're going to see today. So like when Lee asked me about doing this webinar, I was like, oh, appointment-based trading. I was like, that's really cool because that's something similar that we do, and actually what Lee's shared with you today is related to what we do in a lot of ways, and particularly as it relates to mapping the market. So, hey, Mongo, were you able to get that a little bigger? If not, maybe if Lee's here, he can help with that, because I'm not sure how you would maximize that screen.
So I'm here, Rob, and I believe it's his computer because it's perfectly fine on mine.
Okay.
Okay.
Okay, thank you.
I'll try and help him privately.
But without any further delay, my webinar presentation today is reading the market like a map, because that's similar to the kind of thing that Lee's talking about, but we're going to open up the time frames a little bit. We're going to be looking at like 30-minute periods to predict market movement. And then I'm going to show you the system that we use in our trading room and how that interrelates with that. But a better part of what I'm sharing today is related to the history, because the story behind this is really kind of cool. And you see I just got a handful of slides here. So first off, past performance is not necessarily indicative of future results. There's a risk of loss trading futures. Don't use the grocery money for trading. Yeah. And so that being said, the question is, does the market exhibit patterns that repeat over and over again? We just watched a webinar where you're seeing where certain kinds of patterns in a micro scale are happening over and over again. Now, the academics, they'll tell us, well, markets are random. You can't extract money out of the markets. But, and I get into this issue, like, for example, NinjaTrader, I'm a partner with NinjaTrader, and their compliance department doesn't like that we have these statistical tables. And the statistical table is a tendency, but they don't understand that I'm not out there hyping some absolutely absurd result. I'm just telling you, theoretical win percentages based on the history. And then what we do is we find patterns that work within that framework that also have high probabilities. And when those two things line up, you get we call probability stacking. So I'm going to be talking a little bit about that. But markets do have patterns that repeat over and over again. And so we're going to be taking a look at how that manifests and in sequencing. And then we're going to bring in price action, order flow, and momentum. And just about everything that we're going to talk about in this webinar, maybe with the exception of price action itself, you cannot see just by looking at a chart. That's like what Lee was showing you earlier. You can't see that by looking at a chart. You have to do it. You have to get at it by doing research. Yeah. And so a lot of what we do is research, but also in the same way, we've been doing the trading room over 6 years now, and a lot of the advancements in these things have just been from little comments and things that members noticed and fed back, and becomes a wonderful collaborative environment in which we discover new patterns all the time. So how did I start mapping the market or looking at the market as a lot of times they'll call it shape of day. What's the day going to be shaped like? Yeah. And so years and years ago, I read a book. I forgot, maybe that came out in 95, 96, somewhere in there, maybe 90, as late as 97, written by Murray Ruggiero. And Murray His book was very interesting to me. It's a very scientific, very hard science kind of thinking behind it. And I have a degree in experimental statistics and experimental design, and so I was just really in line with that. But I got to know him pretty well, and what was interesting about him was that he had also worked for some pretty high-profile, known successful traders, and so that was of interest to me too, that he had that background. But he introduced me to this guy. I'm not going to say his full name because I don't want anybody trying to call him up or anything out of courtesy, but his name was Bob, and he was doing this thing called market mapping, and Murray told me a guy was making $1 million a year using this technique, and he actually set me up with a phone call with him. And so I called Bob, and Bob spent like 3 hours with me. He's the nicest guy, and the coolest thing about Bob was he was making $1 million a year. He's giving it all away to charities, and I thought that was really cool too. So but what Bob was doing was he was printing out 4-minute charts in the ES, and he was printing it out. Back then it just had laser printers, and he was printing these charts out on transparencies so that you could see through it and have the chart on there. And he had a whole stack of them on his desk, and what he was doing was just holding them up to his screen and finding a pattern that matched, and that's how he was trading the S&P. And I just found that to be, once he turned me on to what he was doing there, I just had to like learn more about it. Well, it took me on a long journey that's been over 20 years, 25 years, probably closer to that. So I'm going to go over with you different forms of mapping, the traditional form of mapping, and then maybe first generation, third generation, fourth generation, and the way that we've kind of come to that. So the traditional, and then we develop what's called a probability walk. That would be the second one. And then the third one is super mapping. And then more recently, ultra mapping. And that's just something that we've gotten completely coded up in the last week or so here. So these techniques work in any market, and it's really a very interesting way about going about things. So how do you read the market like a map? What I've learned in 25 years of market mapping since I was introduced to Bob, and he just got me down the rabbit hole with it. Advanced market mapping techniques and methods, finding opportunities with the probability walk, opening up possibilities with the Ultramap, windows of opportunity with the Supermap, and then we're going to get into some chart applications, and we'll get into a discussion. So Bob, at first, he was printing those things out and taping them up on the screen. And so that's exactly what I did in the beginning. You could call that one first generation. You could call this one second generation. But what I did was I had a guy code this up for me. It's very complicated to do this successfully, and in NinjaTrader 7. And so this is how I first began with it with NinjaTrader. And you can see that this is actually plotting out into the future. Yeah. And so what it's doing is it's making a prediction going forward, and it's just computing at 7 o'clock here. This is a crude oil chart. You can see this from a couple years ago or something. I just screenshotted that one day, from some prior things. And then I was like, well, that's cool, but what if I can start seeing within that? And so the next one I came up with was what's called the 3-period probability walk table. Yeah. And so what we do when we do that is we actually parse the day out. This chart here is a 5-minute chart, but if you use longer charts for this, like a 30-minute chart or something, it won't be enough data in the day because there's only 11 30-minute periods in a day, for example, on a crude oil chart. And so you don't have enough data to feed it. So feed this with a 5-minute. And then the problem becomes the flip side of that is that their 5-minute data is too noisy. And so the question becomes, if I start looking at the extremes that are happening in the market between various periods, then it's maybe some patterns are going to pop up with that in terms of market mapping. And so that's exactly what we see that happens. And so I developed this one maybe about 4 years ago, something like that. And so what we do with this is we do the same thing that, because we're using 30-minute charts, the standard way of addressing that is to call the first period of the day A period, and then B period, C, D, E, F, G, H, I, J, K. For crude oil, in the ES, you'd go on out to L, M, N, O. Yeah. With the A period being the first 30-minute period of the traditional pit session. And then the other periods go back negative from there, go -1, -2, -3, -4, all the way back to the blowbacks open. It would be like -31 period or something like that. Yeah. So, but what I did on this first market map, I called it the 3-period probability walk table, right? So you'd call this like the second generation. But what I discovered was, and this is what you call a conditional probability, is that if you've got the first bar of the day here, which is A period, so these three columns are A, B, and C period. What happens is if B breaks A, then C will go in the same direction 88.24% of the time. Yeah, and so this also tells you over here, it says, well, you're going to break the prior one at 94%, and you're going to break the prior two 30-minute periods, so that would be -1 and 2, so you're going to break those two at really relatively high probability, you know. But this one right here tells you which direction it's going to go in, you know. And this one tells you what you'd expect for that range, ABC. You expect 47 ticks for that. So you're playing with 47 ticks, you know. And this one I actually, you know, I was waiting for the webinar, and so I actually pasted in, this is actually today's table, you know. And then the reason I called it a walk is because you just go forward to the next period. So this is like one appointment after the other all day long. I'm giving you a quality rating. Where's the quality rating? Right here. Yeah. So if this one broke that one, then you're likely to get this one. Is it perfect? Nope. Absolutely not. But it gives you a tendency about the way that the market's going. Yeah. And I'm going to, as this advanced and we learn more and more, I started expanding this out so I could see relationships of this period, AB, this is C period, the third 30-minute period of the day. I started opening it up so I could see even more, and we'll get to that in a minute, okay? So that's the basic pattern. Now, if this one is red, I've turned these red above 79%, but if that first one's red, that tells me that A period, once broken, once B period breaks one side of that, either up or down, that tells me as an 82% that it's not going to go back through the other side of A for 2 more periods. Yeah. So when you get red here and red there, red first and third bar percent, that's an even better probability that you're going to have a successful continuation. Yeah, successful continuation. So this BCD was expected to walk, but it's not as good as the ABC, as that had red and red. CDE was expected to walk, you know, to 88% with the first bar percent. And then DEF doesn't have a walk. But D, once broken, is protected. So that might suggest you see some consolidation there or something like that. Yeah. EFG is expected to walk. This one's 70%. That one's 82. No walk in FGH. GHI is expected to walk with both of them being red. IJK is a classic. This, you want to talk about an appointment. IJK walks almost every single day of the week. Yeah. What are these other columns? These are if it's going to break the prior one and the prior two, and you're going to see on the next one that we call the Supermap, you're going to see that it's going to show you prior 1, 2, 3, 4, 5. Yeah. And so you can start getting a view there. You can also see kind of the evolution of how we came to these numbers. But this one here was the first one, really. Actually, the first permutations of this were a little not quite as well organized as this. And so this tells you the ranges that you're expecting for each of those 3 periods. And then this is what's called standard deviation. It's a statistical measure, but it's kind of a quality rating. The smaller the number, the more reliable it is. Yeah. Especially the smaller the number is in relation to the one to the next to it. So like this is 3 times that, and so quality rating's pretty good right there. This one is more than half of that one, so the quality rating's not quite as good. And this one is, you know, it's almost 4 of those go in there. The 3 of them there, about 3, you know. And so this gives you a quality rating. If this number is really big compared to that, and it'll turn it a little yellow in that case. And so you know what these tendencies are, and then when you get trades in these directions, it, like I said, you tend to get what's called probability stacking for that. So then after I'd worked with this for several years, I came up with the 3rd generation, and I still use the other one every day. But I came up with a 3rd generation, and this one's called the Supermap. And the Supermap is really cool because, like I said, it shows you the ranges for all the past 5 periods, but it also shows you what's the likelihood that you're going to take out the prior period. So what's the probability that A is going to take out one side of -1? And the answer is 90%. What's the probability it's going to take out -1 and -2? It's 70%. You can see in -1 period today, just before the open, that this was 100% to break the prior -2 period. It was 90% to break the -3, and it was 90% to break -4. And if we were to look at a chart, you'll see that's exactly what happened. When you see these stacked up in good measure, you know, 90% for prior one and then 80% for all these, there's a pretty good chance that the market's going to be moving a bit. You know? And so another one on here, and I'm just kind of doing this impromptu. I'm not trying to get too literal about every detail of this because we're covering a lot of stuff. Usually I cover a lot of stuff in my webinars, just kind of show you the things that we did. Yeah. But B period was 80% to expand the range for the day. Yeah. From A, 80%. So in addition to those walks we saw on the other table, this one was saying you're going to expand the range. Then this C period said, yeah, you're going to expand the range again. Yeah, and so if you're getting walks along with that from the prior table we did, and this was supposed to expand the range, and it failed. And when you get failures, you very often get substantial range expansion associated with a stat failure, because it's going in the wrong direction and stops everybody out. You know, and then E period, high probability, and then it rolls off pretty good from there. So that you can also use this table not just to find trades, but to know when the market might be a little trickier for the trading. Yeah. This row here tells you what the expected range is for the day, and we found over the years that when the market has exceeded the range that is expected, that the stats aren't as good. When it's about even with it, it's good. And when it's a little smaller, it's good, because then it's going to play, more likely to play catch up. But if it's way behind, like, you know, you should be at 90 ticks of range so far, and you're only at, you know, 38, that's usually a good indication that it's not going anywhere, and might be better to go walk the dog. You know? So these down here on this table tell what's the probability of breaking the prior one by 5 ticks. Yeah, that's 50%. So what does that tell you? It tells you as you get towards the edge of the prior period, you probably want to be careful. Yeah. This one says when you break the prior, you're likely to do it by 8 ticks. On a lot of days, these numbers are pretty different. A lot of days, A period will break the prior 5 at high percentages. And but it wasn't the case so much for today. Yeah. And then this one goes back to the original one. We just did the 3-period probability walk table, but this one's doing it. Lee was telling me in his webinar how they used the last 6 reports. This particular table is using the last 10, the last 10 weeks. And so these numbers help me to know if it's over the last 10 weeks, those walking, So I don't want to get too abstract with it. This one's really going to spin your head if I've already spun your head. But this one's the new one called the Ultramap. And this one lets you see it all in 3D. And I'm just going to cover some basics on this. And then maybe we'll look at a couple of examples and look at some charts and stuff. So what this table does is it takes so finally after looking at this, because a lot of times you don't really fully realize what it is that you have until you've been using it for a while and you start having discoveries about it. And like I said, that happens in a couple of different ways. Room members asking questions or sharing observations, or you just you come flying out of bed from a dream and you're like, oh my goodness, I can't believe I've been looking at this. This is another amazing thing about trading, and we all experience it at some point or another, is you're like, oh my goodness, I've been looking at this same chart for 5 years and I never saw that before, and it happens every day. Patterns that are profitable, happens all the time. So the basic gist of this table, and this is the same thing, this is a period, and this actually goes all the way back. This maps the entire 24-hour span. And see the whole enchilada in one color-graded picture with the probabilities on each one. So if you go back to Bob's original map with the tape and the thing on the screen, there weren't any probabilities for any of the intervals. So it couldn't really tell you where it's full of noise or anything like that. But what this does is that's why I call it kind of like 3D, because it lets you see the whole big picture. So let me give you a couple ideas of how this lets you see that big picture. So the gist of it is departures from X's, and you're going forward in time. So from here, this is going forward in time. Just so if it's the first period of the day, the first 30-minute period of the day, this is going forward in time, just along that horizontal, And so all those numbers are probabilities is going to continue. So that's the same as the probability walk, the first one that we talked about, really, the first table that we talked about. And those set up every 30 minutes. So 30 minutes later, you drop down an X and then you look out. And then you drop down an X and you look out. You drop down an X and you look out, etc. And so you kind of just walk from one to the next all day, or however you choose. And so this is going, all these going forward from an X are the probability going out towards that next period. Now, if you look at this going down, so this is the first 30-minute, and you'll notice, because I think this is today's table also. I pulled this today for today's table also for you. This is the first period of the day, and what this says is I'm going to break the prior 1, 2, 3, 4, 5 at 100%, going back to -5. That's what that says, going up, right? So this is going back in time, and then you go back and you see where it matches to. And then this one, once A is departed from, this is telling us, if I go down here, it says, well, once it breaks A, it's not likely to go back out the other side for the next period at 100%, for the next period after that at 90%, the next period after that at 90%, etc. So this is, we call this protected. And so we know that A period is likely to continue for the next 2 periods at 80%, and once it's broken in that one direction, then it's not likely to come back through it at 90%. You're protected. So depending on the size of that A period, it might be smaller than a stop, but usually not. Usually not. So This kind of gives us a picture of that. Yeah. And so if it's going out for several periods at close to 100%, you expect it to walk through there. And these, I did another one of these where I actually like marked out some of these regions where it did it. So so that's that's mapping. And I've been doing that, like I said, I've been doing that for 25 years. It's really changed my life in a lot of ways. And so I just share that with you and share a little bit of the history about how it came from a chart to a software doing it to a walk table to a Supermap and then to an Ultramap. All of those things being higher context, also being things that you cannot see just by looking at a chart. Yeah, can't see those things just by looking at a chart. So they're nice to have. Yeah, and that's kind of like the same thing that Lee was getting at. Is it's like got certain periods of the day are better than others. Yeah, certain times of the day are better than others to be trading. Yeah. Are these the only stats we have? No, we got so many of these kinds of stats. It's kind of crazy, and a lot of them up in the high 90% level. Yeah. We'll look at a chart in a minute. I'll give you a freebie of a really high probability one. So that now that we've covered a little bit of the higher context, let's take the system that we've been using forever, going back, and apply price action, order flow, and momentum to it. It could be in alignment with these maps. And why do we want to align with the maps? Well, because it stacks the probabilities in your favor. And so you can get higher win percentage. I'm not going to get into a big issue about money management. We just spent 2 weeks covering money management all in the recordings in our trading room, and covered just all kinds of topics about money management and application of probability distributions in all kinds of ways, and what's the risk that your system will fail given the input statistics for it. But the single most important factor in being successful going forward is a high win percentage, so that we really focus on that. Yeah. If you can get your win percent high, the probability your equity curve becomes smooth, and small levels of variance, like I was telling you, that quality rating on that standard deviation. The smaller that number gets, the more reliable your system is, and the less likely it is to fail. Yeah, it's just that simple. So win percent, super important from my viewpoint. Yeah. Now, guys that trade trend systems on long periods, and they do like managed future kind of things or something like that, those guys could win as little as 25-30% of the time and still end up making money. But they won't make a lot, and they'll be neurotic. And I don't like being neurotic, so I don't go. I try not to be there. Yeah, I try to get the win percent higher. So that's the focus. So a system that shows you what you cannot see just by looking at a chart. I'll look inside the market and price action and the order flow. And then also with these 30-minute maps that we just discussed, we're going to put all that together kind of into the thing. So I've been doing this, what's called the T2 pattern, bread and butter pattern. I'll tell you another quick story. Mike in our trading room, he's been there since the beginning. He was also, Lee talked about being in the trading room with Gina and everything. And Mike reached out to me, he said, hey, you want to start a trading room? I was like, no. No. He goes, well, I'll help you with it. And he kept emailing me back. And finally I said, you know what? I might enjoy that. So I might enjoy sharing and the collaboration and everything that comes with having a trading room. So we started a room. Well, when we started a room, the only pattern that I really had was what we call a T2 pattern. Yeah, T2 pattern. And I had actually learned that concept from Murray. I was talking about Murray, and the whole concept behind it is that cycles expand before range expands. It's amazing, but I've been doing that for 25 years. I wouldn't have made my career as a trader for 25 years and won trading championships if cycle expansion did not beget range expansion. It's a really cool concept. You don't need to fully understand it, but essentially the width of the cycles will get wider before the range expands. It's just that simple. And so we're going to look at some T2 patterns on a chart, and then I'm going to try and line them up. You know, like I said, this is just impromptu webinar, but we've been doing this for the whole history of the trading room. It's what we started with. Now the T2 pattern, I didn't mark these on here. So the T2 pattern is essentially the market's inclined to, is this today? I'm not sure if this is, I don't think this is today. This might have been another day. The T2 pattern happens when this guy breaks lines going down while this is going up. That's a continuation pattern. This is telling you that the cycle is expanding, is essentially what it is. Yeah. And so when this comes up like this, and then this breaks these lines, it's telling you it's going to go up. So if this is breaking lines counter to the trend, then it's more likely to go up. Yeah. And then it comes down like this, A, B, C, D, E, we call it. And then this comes up here. This breaks lines going higher from these dots right here, and then it goes lower. And then this comes up, and this one kind of fakes you out for about 6 or 7 ticks. And then this one goes higher, so it goes A, B, C, D, and there's the E. This is broke the line going lower. It tells you the cycle is expanding. Now see, you can't see that by looking at the chart. You can't see that the cycle is expanding by looking at the chart. So the smart momentum is actually adjusting to the cycle length, and it tells you that the cycle is expanding by dropping below that last prior line. And it does it again. It goes a little higher here, so the trend is up, and then it breaks the line going down and does it again. Yeah. And that's the basic T2 pattern. We've been doing that forever. And historically, that's been close to 90%. It'll go through period waxes and wanes. It'll go through periods where it doesn't do as well. And then it'll go through periods where it's great. When the market's really trending cleanly, it does it wonderfully. Yeah. So I had marked some of the, I didn't mark all of them on here. This is actually today's chart for crude oil. It's the same kinds of patterns work, or similar kinds of patterns work in the ES. I just did this one on crude oil because this is what I had. And so let me see if I can go back to, so like this is my Supermap for today. And we'll just start with the A period. And so the A period was, that's this guy here, was 90% to break the prior one. And we knew from that Ultramap also that it was likely to break several, but it didn't. It just broke to the upside right there. Once it broke to the upside, we knew we expected to walk. Yeah. We knew we expected to walk. So we're looking for, once it broke that -1, and the prediction was it would break the -1 at 90%. Yeah. Well, once it broke the -1, that was telling us it's probably going to go higher. And so this pattern right here, we just covered the smart momentum, the T2 pattern, but then we throw into it the trap trader oscillator that we do. This higher dot pattern is a continuation pattern. Yeah. And so you get higher dots, and then you get higher dots, and then this one we call it a 3DV. There's an article in Traders World magazine. If you want to get a copy of that, this was the prior issue. They asked me to do an article, and I did an article on all these different patterns of order flow. This is actually an order flow indication, 3DV. Well, this had broken the line going lower, so you expect it to go higher there. So when you get this breaking lower and you get higher dots, you expect continuation. When you get a 3DV pattern, it's kind of like the same thing here. You broke a line going against the trend on both of these, and that's a very strong signal right there. Well, what did we know on the Supermap? Well, we knew that Here, so I'll just find my spreadsheet and we'll pull that guy up. Yeah. We knew that B period from A period is expected the next 2 or 3 periods or so to continue at 89 to B. And then when I drop down here is 100% for B to go to C. Well, that's what it did. Yeah. And then on this one, and that's what I said earlier, it failed. And when you get a stat failure, there's 100% that D was going to should have taken this out, but we never got a signal. We call this an encompassing pattern. It goes higher and then it goes lower on the same run. Yeah. And so you didn't get a bad signal there because it just never set up. But when you get a stat failure, a lot of times you'll get an expansion or what we call an encompassing pattern. And our market came down and tested here. The D period was high probability to test the prior two. You know, high probability to test the prior two. Let me go find the Supermap here. D period was 100% to test the prior two. So that's what it did. And then it broke higher and recommenced. So you went A, B, C, D, and then this changes color. And then you get that 3dV pattern that we talked about. And this is also a T2, is what we call a slider. This one we call a 3dVE. This is a trend continuation pattern. This is kind of a T2. It's a little bit questionable, so I just flatlined it. And then this is another T2, beautiful one, yeah, and came higher into the end of the day. It's hard for me to interrelate the chart and the maps entirely unless you're there live doing it. But we just had some wonderful continuation patterns for these G through K, H through K, I through K, and JK. And then it dropped off from there. And so you had a pretty good idea from the Ultramap that that was just going to continue heading higher. It's pretty rare that you see from G period that it's going to go 89%, 88%, 75%, 86%. And then from the next one, it continues the same kind of numbers. And then from the next one, same kind of number. And so when you get this kind of boxing thing, I boxed it out for you there. All these, this period being protected out for 5 periods or 4 periods. This one being protected, this one being protected for 2, this one being protected for 1, give you a pretty good idea in this box. And this is a form of what you would call market symmetry, which is kind of another topic, so I won't get into that too much. But so just kind of sharing with you some of the things that we do in our trading room, using the Supermap and the Ultramap and the 3-period probability walk table. I could go over the 3-period probability walk table also for today. A lot of these periods worked out. Actually, the only one that didn't work out today was that BCD was supposed to walk and it didn't. You can see the ABC walked. Once A was broken, you expected C to go higher. Yeah. Once D was supposed to walk and then it failed, and then CDE was supposed to walk. And that one did not extend, and then it just walked out the whole rest of the day, you know, all the way up. EFG, GHI, IJK. Yeah. But you could see these views on the walk table. This one's a little bit more primitive because it requires the for the full view, because it requires the conditional probability of the one period breaking another. The nice thing about the Ultramap, these newer generation ones, is that you can see it even if it would fail according to the walk table. You can see if it will continue. So I've covered a lot of stuff. You know, we've covered price action. Generally, we just use simple A, B, C, D patterns, just A, B, C, D, green, red, green, green, red, green, green, red, green going up, and red, green, red going down. And so you're just simply trading in the direction of that most recent ABCD. But that goes hand in hand with the walk concept. Once a 30-minute period gets broken, is it likely to continue in the same direction or not? This second panel right here also shows you something that you cannot see by looking at the chart. It's showing you the order flow inside these bars. We call that the trap trader oscillator. And then the smart momentum is actually dealing with the quality of the cycle, that you also cannot see by looking at a chart. So, almost everything on this chart you can't see by looking at the chart. Everything on the probability walk or on the Supermap or on the Ultramap you can't see by looking at the chart. Now what happens is there's a theorem called Bayes' theorem. I think I got a note here to that. So there are many other forms of market mapping that we teach in various formats. Like for example, we were just looking at that chart right there. This might have been, is this today? Yeah, this 5330 level. We knew that either that was going to get hit or this one down here was going to get hit at about a 96% probability level. One of these two lines was going to get hit today. And when the A period came off of that and then A was protected, it gave you a pretty good idea that it was going to be this one. So there was 96% probability ultimately that you were going to make it up to that blue line. And the other thing that we also knew is that once ABC had been in place, that the low of the day was in at I think either 90 or 100%. These are just statistics that we have in the room. So these things are giving you a much bigger picture of what's likely to occur going forward. But I think today we had 133 ticks total in this whole run from the open to the close. But when you combine these things together, I'll just take it off the slide. There's many other forms of market mapping. I just shared another one with you. Those blue lines. A lot of times market mapping could be something as simple as support and resistance levels that have high tag rates. So many of these have really good historical hit rates, predictive value. You can add to other signals like what I'm showing you with the smart pattern system there. That basic T2 pattern I showed you there, those are runs close to 90% on the win rate. And then if you bring in the order flow and things like that, theoretically higher. If you bring in super mapping and things like that, quality theoretically even a little higher. So this is what we call probability stacking. And this is based on something, a friend of mine runs a hedge fund, and he turned me on to Bayes' theorem. And Bayes' theorem was developed by a Methodist minister, and it's a very interesting little piece of math, but it tells you when you take two things and you put them together, what's the probability that when those two things line up, it gives you the formula gives you the probability it's going to be better. Well, we've been doing that over and over and over again for years in the trading room, and so we don't just know it, by Bayes, because at first when you start using it, you're like, I don't trust this thing, man. But after you use it over and over and over and over again, you can get into these probability stacking situations where the theoretical win percent is 100%. Doesn't happen every day, but you do get them that high. Lots of 90, 92%, 96% ones happen. But trading's designed to screw you up, as Lee was talking about. And so what you want to do is shoot for the highest win percent you can get, and then, hope that you win. We've got some room members winning 95, 96% of the time on their trades. Usually those are relatively short kind of trading, not holding out for a lot of periods or anything like that. Usually those trades just, a lot of these trades that we get into when the market's cycling cleanly, sometimes it's like, fractions of a second, just like what Lee was showing. But, the last number of months really hasn't been like that. but we'll go through periods where it's like that. Yeah, just boom, 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 boom. 2 seconds, 3 seconds, 5 seconds, a minute. When the market's moving. Yeah. So this type of system design stands the test of time, and this is what my friend John at the runs a hedge fund told me. He goes, when you put a system together in this way, taking this component and that component and that component and that component, and they're uncorrelated, when the probabilities stack together, the probability of maybe one of those things failing will work, will take away from the system. But the probability of two of them failing simultaneously is minuscule. And sometimes you get 5, 6, 7 of these things lining up on a chart at a time. Yeah. And so that's an entirely different way of thinking about building a trading system than taking, a stochastic and a moving average and this indicator and that indicator, and somebody was talking about average true range or whatever, and putting them together in a system, because those are correlated, number one, and number two, they're not predictive. So we're talking about taking uncorrelated predictive indications, and what you end up getting is what we call probability stacking. And there is nothing more powerful than that kind of thing. Yeah. And that will stand the test of time. It'll just keep working over and over and over again. Might mess you up here and there, but in the grand scheme of things, it works. Yeah. So what I was saying on this slide is I don't want to just trade those map patterns all on their own. However, you could, but that's generally not how we use it. Why? Because we're looking for that super high win percent, and we're looking at being in and out in a relatively short period of time. Like Lee was saying, the longer you hang out, the more it likes to get you. Yeah. So the trading signal itself is primary, and that's why we focus our room around learning that T2 pattern, and then you learn the mapping and all that stuff a little bit later. But we just had some advances in mapping, and so it was also in line with what Lee was sharing. And so I decided, I'm going to cover this, and then also the new release of the Ultramap just in the last few days that we're adding to the trading room. Yeah. So you take the mapping, and then you line that up with order flow, price action, momentum, and go for the probability stacking. Yeah. So this system, everything on that chart, on the charts that we looked at, everything is intentional about it. It's very highly evolved. There's tens of thousands of hours of guys working these charts and trading these things in all different kinds of markets. Yeah. And so we use a smart patterns trading system. It's proven, it's effective, and then you line that up with the maps, and in that way, you kind of know the better times of day to trade. We know better times of day to trade, also from other perspectives as well, and we teach that in our trading room. So really what the trading room is about is the same kind of thing that Lee was talking about, is empowering our members. I don't want you following me. I want to empower you to find your own way, because this is what I've found over the years as I've trained traders, and I've trained thousands of them. Everybody has to find their way of doing it. Yeah, their own personal way of doing it. And the only way to actually do that is to do it. And the trick is whether or not you can do it without losing your shirt, because you do, in the beginning, tend to pay for some education. But the point there is that if you have to find a way to do it in your own way, because you need to understand what it is that you're doing in order to be successful with it. And that takes work, takes time. Yeah. A lot of times people will come to me and they'll say, oh, I want to learn to trade, but they read some trading books, and usually by the time something gets put in a trading book, it doesn't work anymore. Yeah, it's sad to say, but so traditional examples that you find in trading books and stuff like that, especially if they're older. The market just chewed that stuff up with, you got guys using quantum computers and stuff to figure all this stuff out these days with degrees from MIT and high mathematics. So, you got to have an edge that works in a scale that others aren't exploiting, or you have to be willing to do things that other traders aren't willing to do in order to be successful. Like I've got a friend, he sells option premium. That's things that other traders aren't willing to do, and he uses monthly charts. Yeah. So, and he makes a very nice living, lives on the beach in Malibu. Yeah. So, this is just an example of the way it gets sliced and diced. So the way I do this is I got the oil trading room. I'm not like a hard marketer, as a polished marketing and everything else. I've been doing this for a long time. I won trading championships. I've managed hundreds of millions of dollars over the years. And then I was kind of like in a semi-retirement mode. And Mike asked me, hey, you want to start a trading room? So we teach these mapping techniques in our trading room. And it's a great community. We got a lot of people sharing in there. Not everybody shares. A lot of people are pretty quiet, but it's an ongoing evolution of knowledge. And that's what I like about it is we're constantly discovering new stuff like the Ultramap that I shared with you today. So that's what I got for you today. My websites are Indicator Smart. You can learn more about all these indicators. All those videos on indicatorsmart.com tell cool stuff about indicators that you can't just find elsewhere. All the videos show little secrets and stuff on all the indicators. But if you're going to go there and look at that, I would look at Smart Patterns components. Yeah, that's the ones I'd focus on. I teach daily, so in the oil trading room, we've got extensive training in our members area to get you up to speed on learning some of these patterns and things like that. I've got past webinars covering many of the concepts that we discussed in here outside of market mapping, the T2 pattern and the Bayes theorem and all those kinds of things. Just tons of cool content there for you. All that's free. There are no secrets being held. In fact, I used to cringe when I do a webinar because I'm telling stuff that would otherwise be entirely like sacred, and I found that there's no harm in sharing it because you got to understand it. And usually, you learn a few things, if you connect with the kinds of things that I share, then you probably want to join the room at some point and get down to some nitty gritty with it. We get into a lot of things also related to psychology, and we even get into some metaphysics and physics and quantum physics and all kinds of cool stuff in there. Yeah. Make sure that you go over to Oil Trading Room and get on the mailing list there. If you vibe with anything that I'm sharing with you here today, get on over there and join up with a mailing list, because we'll keep you informed of market map stuff, because I might be putting that into a website and doing reports for all the different markets and things like that. Yeah, so all right, guys, that's what I got for you. Oil Trading Room, indicatorsmart.com. Let me see what kind of questions I got here. Let's see how long I took on that. Yeah, I think we're running pretty close to an hour, and that's usually what I take. Let me see if there's any questions here, guys, and so I can make sure. Okay, I'm just going to, man. Oh, hey, Mike. Oh, man, I'm seeing all kinds of familiar faces in here. Mike is here. He's the guy that got me to start the trading room. He's probably going over there down. Got it out, Rob. So yeah, we're gonna do our best to get a recording out. If you go to, I'm gonna do my best to, I'll probably get it on there tomorrow. Usually after these webinars, I go walk the dog. There's oiltradingroom.com webinars, and I'll do my best to post it on there tomorrow. Yeah, yeah. And I think these were questions for Lee. Oh, I'm not used to using this webinar software. Let me open this up a little bit. Okay. 225. Which book, Ford, if you're still here, which book, or you could reach out to me in an email. You got my email, Ford. Elizabeth asked, are these calculated or just historical? So it's in the trading room that we do all this stuff in a live environment. Yeah, yeah. And so hopefully, Michael, I covered enough when we got to those charts. A lot of times I get too much packed into these webinars, and I appreciate you being tolerant of that. I usually share more than less. You know, and people who are marketers and stuff, they should said, you know, you should go really narrow. But I'm a big stroke, you know, broad stroke kind of guy, and so I like sharing. I like sharing with you a lot of stuff. If it vibes with you, get on our mailing lists and enjoy the content on the webinars. If it vibes with you even more, join a trading room and look into the Smart Patterns trading system at Indicator Smart. That's really the core of all this, and we've just been doing that in the trading room since 2014. Yeah, 2014. So, all right, guys, that's what I got for you today. Thank you for coming in. Thanks, Lee, for putting this together and getting me to do a webinar.
Rob, thank you very much. I really appreciate it. That was great. Really interesting stuff.
Yeah, mapping's kind of like a whole world, and I'm not even sure that there's any end to it. It's just constantly learning new stuff.
Isn't that the truth about trading, though, too?
well, that's why you get addicted to it. You're like, I mean, if you could like, to me, if I can figure something out, I'm done. You know, I'm on to something new. But with trading, I learn something every day.
It never stops. Never.
Every day.
It's unbelievable.
Yeah, and that's why I love it, because I like, you know, it's kind of a weird thing. I've been self-employed for decades, and I'm like, you know, people ask me, and I go, I like not knowing.
So
I'm more comfortable not knowing than I'm knowing, because if I know, I'm just like, there's nothing to do.
Yeah,
yeah. So always new discovery.
Greg was asking if you call out any trades in your room.
So what we do is we teach the patterns. So like, you know, Lee said that we're young. I don't, it might not apply to me.
I lied a little bit.
Yeah. So these signals are on the screen in the room. During the time that I'm lecturing in the room, I'm marking them on a chart, and I'm not saying, oh, buy here at this exact price, but the trades occur on the reversal bars. You see this bar is a little bit bigger than the other ones. That's what we call that, a reversal bar. And you'll see all these marks are on reversal bar, reversal bar, reversal bar, reversal bar. And so if you do the training, I do my best to call the stuff out while I'm in the room. All the trades are on the reversal bar. So am I calling the trades? Yeah, you bet I am. But I'm not saying buy at 49.80 stop, blah, blah, blah. We're usually covering other topics and things like that. I'm helping people in the room. And so I can't guarantee you I'm going to successfully call. Sometimes I miss them. I can't guarantee you I'm going to call every trade successfully in the room, but do I call the trades? I'm marking them all morning long for 2 hours every day. Are there any other
That's
questions
the
there,
last
Lee?
one I see.
Okay, cool.
Yep. All right.
Yeah.
Okay.
Thanks,
Rob,
Pat.
thank you so much. And I want to thank everybody for coming and being a part of this tonight. And we'll send out a recording, will get sent. Rob, just so you know too, I'll send you a recording hopefully tonight as well.
Okay, and I'll post that, like I said, on the webinars page, tomorrow.
Okay.
So
All right.
enjoy that there.
Okay, so thanks everybody for coming. Thank you, Rob, and thanks everybody for joining the webinar. And stay safe, everybody, and have a great rest of the week. And we'll see you in the future again real soon. We'll do it again. Thanks.
Cool.
Thanks, and good night, everybody. Take care.